Congressman Darrell Issa does join us now, and Charlie will hang around, and we can kind of, by the way, thank you, Congressman, for coming on. We can continue this conversation. What's your biggest priority of this? Because tax reform, that's the big deal. Most of our viewers will tell us that's what they want to see it get done. I use the term tax reform as opposed to tax cuts, but what's your biggest priority, cutting taxes or making sure that this whole thing is paid for?
Well, I think it's both, and let me explain. Revenue neutral can be defined in two ways. One is for every dollar that somebody pays less in tax, somebody else pays more in tax. And I call that the winner-loser phenomenon. And then you hope that you grow the economy. The second one is you make changes in the tax code that might cost you revenue in the short run, but cause the economy to grow faster, and thus you get more revenue. That's the win-win scenario. So the latter is where most of us that work on the House side are, which is that it's not per se a cut, but it is in fact one that is, the cuts have to be designed to grow the economy, such as reducing the corporate tax and causing investment to come to the United States that's stranded overseas.
Now, no,
if we do that properly.
I'm sorry, Charlie has a few questions for you, Congressman, but I just want to, something stood out to me, and I just want to follow up on it real quick. It does sound to me, as opposed to going with, something that would be traditionally revenue neutral, you are open to the fact of cutting taxes and having economic growth pay for those tax cuts. That's fair? That's what you're saying? Yeah.
Not only am I saying it, but I think the American people understand that they cannot trust Congress to basically do something revenue neutral, because if you do it in current dollars revenue neutral, what we're saying is we're going to get together and we're going to figure out winners and losers, and for everyone that gets a tax cut, somebody else is going to get stuck. That's really one of those things where you don't really want to have the discussion of who has more power to lobby to get a cut at somebody else's expense. That doesn't make a lot of sense. And historically, the tax cuts that have grown the economy, the Kennedy tax cut, the Reagan tax cut, they were not currently revenue neutral, but they grew the economy and more money came in.
Well, Congressman, thanks for joining us. You heard my report before about McConnell softening on this. What do you hear coming out of the Senate? Is he truly softening on this? Does he buy the way you look at revenue neutrality, as I guess a lot of supply siders would look at revenue neutrality?
Well, I think he buys the fact that if we can convince CBO and other outside heritage, other outside neutral groups to score the likely economic growth, and that gives us in the 10-year window more revenue, that it is in fact revenue neutral. And I don't want to correct you for what you said, but my understanding is that if it's revenue neutral in that 10-year window, it is compliant with this arcane process where we don't need 60 votes. And that's important.
You can correct me anytime,
Dynamic scoring is allowed.
No, that is important.
You can correct me anytime on parliamentary procedures, but that's very interesting. So if it's not, so basically you only need 51 votes, even if it's not traditionally revenue neutral, theoretically.
Well, yeah, the way reconciliation was written, it says it has to be revenue neutral in a 10-year window. Economic growth can be in there, and we can interpret. Now, that's very much up to the Senate, because the House has already made its decision, but the Senate would have to make its decision under the so-called Byrd rule and so on, that this is compliant. Obviously, you've got to ask the parliamentarians, you've got to ask the senators, but I think for all Americans, they want a win-win out of tax reform. They don't want to win-lose out of tax reform. Yeah. And I think that's going to be the difference between doing it and not doing it.
And do you think McConnell's on board with your version of revenue neutrality?
Well, I have a lot of former House members, senators, who I think are on board. Ultimately, McConnell has to reflect his caucus, and I think his caucus wants to see a Reagan-esque, Kennedy-esque type of grow the economy. And if that's the goal, I hope some of the Democrats, Joe Manchin and others, will get on board too, because I don't really want this to be just 51 votes. I want it to really be America getting behind something that's going to grow the economy.
Where do we get the best bang for our buck, do you think, in this? And what do you think is the most likely outcome? Your background is in business, so is it on the corporate side or is it on the individual rates? And how do you see this actually playing out?
Well, I go back to the now famous investment tax credits that Reagan used and recognize that anything you do that tells corporate America and non-corporate America, mom and pop stores and so on, that they will be rewarded for investment makes a real difference. And so as we shift from our current tax policy, which is we tax you on profits,
right,
rather than we tax you on distributions after profits, any kind of a change along that line, lowering the corporate tax rate while maintaining that their distributions are taxed, could be helpful not just in the so-called C Corp, but in the S Corp and the limited partnership. Those investment incentives are what give you growth in the 10-year window.
Congressman, on the individual tax cuts, I guess I don't have to remind you, you're in a high tax state. There are some I guess deductions that have been singled out to be ended by in the Trump plan. I guess the Senate and the House is talking about this as well. The deduction for state and local taxes is something that even Republican New Yorkers probably want to keep in any bill. Do you think that survives this tax plan?
It may be too big to get passed, but let me just tell you something that we do have a system in which some things are deductible, others aren't. If you're in a state like mine with high sales tax and 13.3% income tax, right, you find yourself in the so-called AMT, meaning that you already cannot deduct all of your state income taxes against your federal, and of course federal is at 42 for somebody like me. So the reality is that the system is broken. We should address the so-called AMT that we're always twiddling with, and we should ask once and for all, is it up to the federal government to allow a deduction for what states spend, or should they be completely separate? I actually am willing to look at completely separate, so that we disconnect state decisions from federal decisions, or if you will, federal government subsidizing states' taxation system.
All right, we'll see you when you get back to Washington. It's always good to talk to you, Congressman. Thanks a lot. Enjoyed the break.
Thank you.
I guess Congressman Darrell Issa, Charlie, good stuff.
Anytime.